Welcome to From A to Zelling, your weekly deep dive into everything South Florida real estate. I'm your host, Alex. So this week, we're going to tackle the one question that seems to be on absolutely everyone's mind. Is this market booming or is it busting? We're going to cut right through all those confusing headlines and give you the real data you need to make sense of this crazy landscape. So let's just jump right in.
Okay, so let's get real. The big question is just, what is actually happening out there? I mean, you've seen it, right? One day you're reading a headline screaming about a market crash, and then the very next day you see a story about some new multi-billion-dollar development breaking ground. It's completely confusing, it feels totally contradictory, and honestly, it's our job to sort through that mess for you. So today, we are tackling that question head-on. Are we in a boom, a bust, or maybe something else entirely?
So here it is, the central paradox we're all facing. On one side of the coin, you have developers making these huge, long-term bets on the future of South Florida. I mean, they are pouring billions into land and these massive mega projects. But then, on the other side, the data right now, today, shows a pretty clear cooldown. We're seeing rising inventory, we're seeing prices dropping in certain areas. So how can both of these things possibly be true at the same time? Let's unpack it.
All right, let's start with the bull case. The powerful argument for why everyone's so optimistic long-term. And look, this isn't just some wishful thinking. It is backed by some of the biggest investments this region has ever seen. The smart money is clearly looking right past this current moment and betting big on the future of South Florida.
First up, just look at this land rush. It is insane. In just the first 3 quarters of this year alone, developers spent a staggering, get this, $2.1 billion on land in Miami-Dade. That's a 111% increase over last year. Think about that. When the people who literally build our future are competing so fiercely just for a piece of ground to build on and quadrupling land prices while they're at it, well, that is a massive, massive vote of confidence.
And they're not just planning little projects here and there, no way. We're seeing developers thinking on a city-like scale. It's huge. Take Sunrise, for example. The $2 billion Metropica project is hitting the accelerator on plans for 3,000 new homes in this totally self-contained community. And then, not to be outdone, you've got a giant like Lennar planning another $2 billion project, a whole 15-minute city on 1,000 acres of farmland. These aren't just investments. These are generational bets that our population is going to keep growing for a long, long time.
Okay, now let's zoom out a bit and look at the global picture, because this is a big piece of the puzzle. Foreign buyers poured an absolutely staggering $56 billion into U.S. residential real estate this year. That's a 33% jump from last year. And guess where a huge chunk of that money is flowing? Yep, right into Miami. International investors see South Florida as a safe haven for their wealth, and frankly, a lot of them are way less sensitive to our mortgage rates.
So who exactly is driving all this demand? Well, this really breaks it down for us. First, you've got Latin American buyers. They account for nearly half, we're talking 49%, of all new construction sales in Miami. They're looking for the safety of a dollar-denominated asset. At the same time, that wave of domestic migration is still going strong. You've got buyers from high-tax states like California making up a huge portion, sometimes up to 40% of luxury sales. When you mix that international and domestic wealth together, well, that creates a really strong foundation for the high-end market.
Okay, so that's the bull case. And it's compelling, right? It's all about the long term, it's full of these huge, impressive numbers. But let's be honest, if you're actually trying to buy or sell a home right now, today, the reality on the ground feels, well, pretty different. So now let's pivot and look at the bear case, the hard data that shows a very real present-day cooldown.
So the first and clearest sign of a slowdown? It's all about time. Just look at the data coming out of Palm Beach County. Last year, the average home sold in about 65 days. This year, that number's jumped all the way up to 81 days. That's more than 2 extra weeks just sitting on the market. It's a really significant increase. And it's a crystal clear signal that the frantic, buy-it-at-any-cost urgency of the pandemic boom is officially over.
And this next number, this might be the single most crucial statistic for understanding the market right now. The Tri-County area currently has 9.7 months of housing supply. Now let me put that into perspective for you. A normal, balanced market, one that doesn't really favor buyers or sellers, that's usually around 6 months of supply. So at almost 10 months, well, that number makes South Florida the most buyer-friendly major metro market in the entire country. What does that mean for you? If you're a buyer, it means more choice and a lot more power. If you're a seller, it means a whole lot more competition. So you might be asking, where is all this extra inventory coming from?
Well, a huge part of the answer is in the condo and townhouse market. Get this, in Palm Beach County alone, inventory for condos and townhouses has surged by a massive 186% compared to last year. 186%. It's really a combination of things. That post-pandemic construction boom is finishing up, but demand is slowing down, and that's creating a pretty big oversupply in that specific part of the market. And look, we can't just ignore what the rest of the world is saying. For the second year in a row, the big Swiss bank UBS has ranked Miami as the #1 city in the world for housing bubble risk. Their whole analysis points to this major disconnect between our sky-high home prices and what local incomes and rents can actually support. And yeah, sure, local factors might explain some of it, but that is a pretty stark warning coming from global analysts.
Okay, so we've got these two totally competing stories, right? The long-term boom versus the short-term bust. To really make sense of it all, we need to get more granular. The truth is, South Florida isn't just one single market. It's a bunch of tiny micro-markets, and they're all behaving differently. So let's zoom in on Palm Beach County, because it's a perfect example of this tale of two markets.
This really lays it all out, this tale of two markets right here in Palm Beach County. Look on one side, you've got single-family homes. The supply is almost balanced at 5.9 months, and the median price has barely budged. It's down less than 1%. Pretty stable, right? But then you look at the other side, condos and townhouses. Whoa, a massive 10.4 months of supply, which puts it deep into buyer's market territory. And you can see exactly what that does to prices. They're down almost 6%. It just goes to show you, this cool down is definitely not a one-size-fits-all kind of thing.
So, here we are, back at the paradox. How do we solve it? Is it a boom or is it a bust? Well, according to pretty much all the expert analysis out there, the answer is neither. What we're actually witnessing isn't a crash. It's a necessary and, when you get down to it, a healthy rebalancing of the market.
So what does that actually mean, healthy rebalancing? Basically, it means the market is just returning to normal. The crazy, unsustainable frenzy of the past few years, that's over. We're moving back towards a middle ground, a place where negotiations are possible again, where inspections actually matter, and where the market can just function in a more stable, predictable way for everybody. The key takeaway here is that it's a correction, not a catastrophe. And, we're seeing the proof of this rebalancing on the ground every single day. Sellers are now regularly offering concessions, things like helping with closing costs or buying down a buyer's interest rate. The number of all-cash deals, that's gone down. And what's really interesting is that we're seeing more first-time home buyers finally getting a shot, escaping those crazy high rents and actually getting into the market. These are all really good signs of a market that's healing. So, the big question is, what does all this mean for you? Okay, let's break down some real, actionable advice for both buyers and sellers navigating this new, rebalancing market.
All right, for buyers, listen up. The message could not be clearer. Your moment is right now. All the analysis shows that October is the sweet spot. You've got peak inventory for the year and way less competition than during the crazy summer months. Seriously, you are in the best negotiating position you have been in for more than 5 years. Now for sellers, the strategy has got to change. You have to be realistic about your price and you have to be ready to negotiate. In a market with this much inventory, offering a concession like a mortgage rate buydown, that's not just a nice little extra anymore. It's a critical tool to make your property stand out and get a serious offer on the table.
So when you put it all together, what's the ultimate takeaway here? Well, you've got developers betting billions because they see this current cooldown as just a temporary, healthy correction. A little speed bump on the road to long-term growth. But at the exact same time, this short-term market gives buyers more power than they've had in years. It really seems that in a complex moment like this one, patience just might be the most valuable asset of all. And that's your comprehensive look at the market for this week. For an even deeper dive, you can always visit us at getzelling.com. I'm Alex, and this has been From A to Zelling. We'll see you next week.